Welcome to our final episode on the Business Lending Guide. With me today on our Making Sense video series, I have Alicia Riedel. Alicia is a commercial banker, here at our Superior, Maine location, which is located at 1127 Tower Ave. My name is Hannah Willis, and today we are going to be talking about what happens after you're approved for a loan. Like, we talk about all this stuff, that leads up to it, like what you need to have, all of this. And then now what happens? Okay, you're approved. What do you do? So thank you for sitting down with me today.
Thanks for having me, Hannah.
One thing I want to touch base on is this jar in front of you. So you will notice that there are some coins in it. Your coworkers ahead of you have had to pay into this. So what it is, essentially, is a swear jar. So if you start using, but for bank terms, so if you start using bank terms that are like a little too jargony, or maybe you're using some acronyms, I'm going to stop you and you're going to have to explain what it is and then pay a quarter into the jar.
Okay.
Does that sound good?
Sounds good.
All right. So I've gotten the news. I'm approved for a loan. What are my next steps? What do I do?
So now this is the fun part, right? Because now we're preparing for closing.
Give me the money.
So yeah, exactly. So the steps that we're going to take to get ready for closing, it's really going to depend on the type of loan that you're taking out. So let's say, for example, maybe you're purchasing a commercial building. Okay. We're going to need to order things such as an appraisal, title work, flood determination, an environmental search. All of these things are going to make sure that we're helping you to protect your investment.
Okay. But all of that stuff doesn't play into the loan. Like, I'm approved, I'm good to go, even though you're going to have to still maybe do a little bit more research and work.
You are approved, but it is dependent on that appraisal. So we want to make sure that appraisal comes in and it has a value that's acceptable.
So preparing for a closing, is there anything, I just consider myself the business owner, is there anything I need to prepare for? Like do I need to bring anything?
Your banker is going to help kind of walk you through that.
Okay.
They're going to stay in contact with you throughout the entire process and let you know what's happening, what you need to do. One of the things that's going to be common on any loan that's secured by collateral, so whether it's real estate or maybe a piece of equipment or a vehicle, you're going to need to get insurance coverage on that collateral, and you're going to need to list National Bank of Commerce as either the loss payee or the mortgagee, just so we have an interest in that collateral if something were to happen. And you'll need to provide that proof of coverage prior to closing.
Okay. I'm going to have you pay a quarter in. What is mortgage payee, loss of payee? What is that?
Sure. So that's just us taking an interest. We have interest in that piece of collateral.
Okay.
So let's say if there were a fire in the building, or if it's a vehicle and you get into an accident and it's a total loss, we want to make sure that your loan's going to be taken care of.
Okay. Got it. So what can I expect at the closing? Like, do we just sign papers, or like what do we actually do?
Yeah, the closing's the fun part, right?
Yeah.
You've got all the hard stuff out of the way. You're approved for the loan. We've gotten the appraisal. All of the pieces have come together. So now we're going to sit down and we're going to sign documents.
Okay. And then after that, we get the money?
You get the money.
We get the money.
Yeah.
How does that happen?
So how you get your money is going to depend on the type of loan. Let's say it's real estate. Likely we're going to be working with a title company, and they're going to be the ones distributing the funds.
Okay. Question on that really quick.
Yeah.
When you say distributing the funds, what does that mean? Like they're gonna give me a check, or they're gonna have
they're gonna
a pile
make sure.
Of cash?
So they're gonna pay the seller of the property, or let's say you're taking cash out on a property you already own. They're going to give you a check for the proceeds, or they might wire the money into your account.
Okay.
Really kind of depends on your preference. They're gonna make sure everybody gets paid. So the appraisal, there's gonna be a fee for title work. They're gonna make sure all of those things get paid.
Okay.
If you're purchasing equipment or a vehicle, a lot of times what we'll end up doing is issuing a cashier's check to the seller. And then the other option for receiving funds is we can directly deposit the money into your account or send you a wire if your account is somewhere else.
Okay. I think that's so good to know, because, they always say, like, you're going to get your funds. And it's like, how am I going to get them? Like what physically, is it deposited into my account? Do they write me a check? Do they bring me a stack of cash? Like, so I think that that's just a really like basic question that I think people probably don't know. So thank you for talking about that.
Yeah.
Okay, now the like not so fun part after I got the money, I need to make the payments.
Right.
The bank loves that. The bank loves that we make the payments. How does that work?
So your payments are due on a monthly basis typically, and they start about a month after you close your loan.
Okay.
The nice thing is that there is some flexibility with the due date. So let's say you're a landlord and how you're making your loan payment is by you're dependent on rent from your renters, right? And that's due on the first of the month. Well, sometimes that might take a little bit of extra time to trickle in. So maybe you want to set your due date for the 5th or the 10th of the month just to allow for the rental income to come in. So it's really nice. You can set it to whatever's going to work well into your bill schedule.
Do you just like set up a direct deposit to NBC, or how do you write a check, or how do you actually pay?
You can do either.
Oh,
it's your preference. So we can send you a statement every month. Essentially, it's a bill, and we send that 10 days prior to your due date.
Yeah.
And then you can either mail us a check or bring it in. Otherwise, it's easiest if you just set up automatic payment. So we can take it from an NBC account or an account from another institution.
Nice. Are the payments different based on the kind of loan that you get, or do payments typically work the same, whether it's like a term loan or a real estate loan?
Yeah, that's a good question. They do work a little bit different depending on the type of loan. So if it's a term loan, so there's a set term that you're making payments, you're going to make principal and interest payments.
Yep.
Principal is the amount that you're paying back towards that original sum of money that you borrowed. Interest is what you're paying. That's your fee for borrowing the money, essentially. For a line of credit, you're going to pay interest-only payments, but it's only going to be based on the amount that you have drawn against the line, not necessarily the limit. So if you're only using half of the line of credit, that's the only amount that you're going to pay interest on.
Okay.
And then you have construction loans, and typically during the construction phase, you're going to pay interest-only payments. Now, that construction phase, it can vary. It just depends on the scope of your project. But at the end of the construction phase, then you'll start making principal and interest payments.
Yep. So for the line of credit, do you have to pay that back a month after you draw on that as well? Because you said you have to start making commercial loan payments on a term loan a month after.
Yes.
So do you have to start making the payment on the line of credit a month after you draw?
Correct.
Okay. Mm-hmm. Okay. Got it. Let's talk a little bit about annual maintenance of a business loan. So I got the loan and I'm making my payments. Am I just kind of good to go, or should I expect to hear from my banker, or do we do some sort of like annual check-in, or what's kind of the status after you are essentially kind of just like set to go?
Yeah. So ultimately, it really depends on the type and size of your loan as to what that annual maintenance is going to be.
Yeah.
A lot of times we're going to be requiring annual statements from you. So tax returns, we might require some personal financial statements for the guarantors. Guarantors are tied to the loan as an extra person to kind of make payments if the borrower is unable to. Mm-hmm. So you can kind of think of a guarantor like a cosigner.
Yeah. Okay.
So additionally, we might require periodic financial statements, so either on a quarterly or a monthly basis. We might require a profit and loss statement or a balance sheet. The banker is going to inform you of this information prior to closing, and then again at closing, it will be in your documentation. So you'll know exactly what to expect for what's required. And then in addition to financials, you'll also be expected to make sure that your property taxes are up to date if your loan is on real estate, and keeping your insurance up to date as well.
And I would have to assume, we're going to go over this all at closing, but likely it's a little overwhelming.
Right.
So before something's due, the banker's going to call, right? And be like, hey, I need this profit and loss statement. I don't have to start writing down certain dates that I need to get things to my banker, right?
Right.
Okay.
Yep. So your banker is going to remind you when those things are due.
Okay. Mm-hmm. Awesome. Can we do a little kind of rapid fire Q&A?
Yeah.
Okay. Can I pay my loan off early?
You can. However, it might be subject to a prepayment penalty.
Okay.
That's going to be described in your note that you sign at closing.
Okay. Can you tell me kind of generally, like, what's a prepayment, like, what would a prepayment fee be?
Yeah, so
or
it's
prepayment penalty, excuse me.
prepayment penalty. I would say that our most standard one is a 5-4-3-2-1, which what that means is it means if it's the first year, you're going to pay a 5% penalty on early payback. The second year, it's 4%. And it keeps counting down until that fifth year, you're going to pay 1%. And then after that fifth year, that prepayment penalty goes away.
That is really interesting. I've never, obviously I haven't like really talked about this kind of stuff, but I've never heard it described that way. So thank you for that.
Yeah.
Can I extend my loan?
There may be an option for you to extend your loan if the need arises. That's just something that's kind of determined on a case-by-case basis. So you would want to speak with your banker on that.
Can I refinance my loan?
Yeah, so there might be, maybe you want to refinance your loan because you want to lower your payment, or maybe you want to take some additional cash out because you want to purchase a new piece of equipment. Whatever the case may be, there may be some options for refinancing your loan. You would just work with your banker again to see kind of what's available for you.
Yeah. Can I take out additional loans if I'm still making payments on my first loan?
Yeah, it's a possibility. I mean, that it's very common for commercial customers to take out multiple loans at a time. I would just say the biggest thing is if you've just taken out your new loan, you may want to give it some time to establish a good payment history.
Yeah.
That just gives your banker an idea of how you're paying, how you're handling that debt. So then they're going to have a better idea of how you would handle new debt.
Yeah. So probably set you up for a better chance of being approved.
Correct.
Yeah. What happens if I can't make my loan payments?
Well, we hope that never happens.
Yes.
Yes. But, we understand that situations do arise. When it comes to loan default, there's a lot of different things that are defined as default, and there's a lot of different remedies to that default. So I would say the biggest thing is if you ever get to a point where you feel like you can't make your payment, contact your banker immediately. Communication is key.
Yeah.
Your banker wants you to succeed, and they're going to help you try to find a way to do so. And if we can't help, we probably have a good idea of maybe some resources available to you that may be able to help.
Yeah, that's a really good point because, I think maybe a business could get in that situation and then you just kind of panic and it's like you don't want to tell the bank that, you're in this situation. But like you said, communication is key and
absolutely
we want you to obviously do well too. So
yeah,
we're here to help you find a way to make it happen.
Definitely.
Awesome. What is one takeaway you would have for somebody who is applying for a loan?
I would just say, communication with your banker is key. I've kind of mentioned that word a few times. Communicate.
Yep.
Your banker is going to do their best to kind of keep you in the loop throughout the entire process, let you know what's going on. If you have questions, reach out to them at any time. We've kind of talked about a general overview today of what happens once you're approved for a loan, but each situation's a little bit different. So if you have specific questions, definitely reach out to your banker.
So when you talk about like communication with your between banker and client, do you ever text with your commercial clients?
I do. I really get to know my clients and I figure out what's the best way to reach them. Some customers, it's much easier to just send them a quick text. Maybe they're out in the field meeting with clients themselves, so they can't easily answer a call. So they prefer that text.
Yeah.
Some customers prefer a call. So, we'll kind of work together and communicate in a way that works best for you.
Yeah. I love that you will text with your customers.
Yeah.
I think that's fun. I love being able to just send a text, and that's, to me, like the sign of a really great relationship too. So that's cool.
Definitely.
That wraps up our final episode of the Business Lending Guide. But stay alert because we will be back with more Making Sense videos that break down the ins and outs of banking. Alicia, thank you for joining me today.
Thanks, Hannah.
All right. Bye, everybody.
Bye.